I'm very pleased today to announce our 2016 results. For the third year in a row, we recorded record earnings and we remain the best capitalized and most profitable bank in Uganda. We generated revenue of 643 billion, which translated into a profit after tax of 191 billion. We grew 27% year on year in a market that was challenged, in a market that we saw a few banks actually fail. At the end of the day, more customers trusted us with their deposits, which grew 25% in a market where deposits only grew 10%. Our accomplishments in 2016 were a direct result of pursuing the right strategy, operating a diversified business model, having the right people that work together to fulfill our customer needs, an intense client focus in our right segments, and having a client-centric strategy, which has paid off significantly. We saw a macroeconomic environment that was a little bit muted, with GDP growth going down below 5%. This obviously translated into private sector credit growth growing at less than 6%, something we hadn't seen in a long time. We had gotten used to a double-digit private sector credit growth, so it was a very difficult and challenging market to work with. We also witnessed asset quality deteriorate quite rapidly, and for the first time we saw non-performing loans in the market cross the 1 trillion mark, getting close to a 10% NPL ratio in the industry. And this directly translated into profitability dropping 44% year on year. We were still able to come out on top in this market by very focused on the client and making sure that we wrote the right business the right way. We also made significant progress on our priorities for the year and the key initiatives that we'd set for ourselves. And if you recall, it was placing the customer at the center of everything we do, executing flawlessly, and building employee capability across all levels. Now let's review our performance in 2016. We registered considerable growth across all financial key metrics, and we also gained market share in some key places. We recorded revenue of 643 billion, which was a growth of 21% year on year. Total deposits at the end of December were 3 trillion, up 25%. Our net loans and advances grew 3%, which is not surprising because it was deliberate. We did not want to increase our asset book in a higher interest rate environment. Also pleased to see our off-balance sheet contribution with guarantees and letters of credit crossing the 1 trillion mark in support of the government of Uganda infrastructure spend. We generated a profit after tax of 191 billion, which was a growth of 27%, the fastest growth that we know of any bank in the country. We processed over 50 trillion worth of transactions in 2016. We arranged about 1 trillion shillings worth of credit and capital. And I was also very gratified to see us arrange the $650 million Karuma interest rate swap, where we effectively saved the government of Uganda about $100 million of future LIBOR-based interest payments. We collected 2.8 trillion worth of taxes for the Uganda Revenue Authority and directly paid 73 billion to the government treasury. We gainfully employed about 1,800 employees for the year. We are the second largest employer in the sector. We made social investments of 1.1 billion that positively impacted about 10,000 beneficiaries across the country. In summary, I would like to thank all our stakeholders, board members, staff members, customers, regulators, communities, and shareholders for making 2016 such a remarkable year. I'm honored to work at this bank with its outstanding people. What we've accomplished in such difficult circumstances is extraordinary. I'm confident that if any of our stakeholders could witness our people up close in action, you would be immensely proud and join me in expressing deep gratitude to them. I'm proud to be their leader. Let's continue working together towards our shared vision to transform lives by satisfying all our customers' financial needs moving forward.
Stanbic Bank, moving forward.